If you think writing off that interest on your taxes is a benefit to you, I've got news for you. What's up, everyone? Thank you for stopping by the Achieve Financial Coaching channel, where we believe in breaking the chains of debt and talking about all things related to personal finance. My name is Kenny Simon. I am your personal finance coach. And today I want to talk just for a little bit about writing off mortgage interest debt, right? We all know that on our taxes, that we can write off the interest that we pay on mortgages, right? Now, listen, I am not a tax professional, but I do keep up with some of the changes and then assess how they impact me. I have a few things I want to share with you today that might make you rethink whether or not writing off that interest is a benefit to you. Subscribe to the channel, like the video, please leave a comment, and share this with some friends. Let's get started. So let's start today's video off with a little definition, talking about what a deduction actually is, just so we're all on the same page. So a deduction lowers a person or organization's tax liability by lowering their taxable income. These deductions are expenses incurred during the year that are subtracted from your gross income when preparing taxes. So these are things that lower the amount of taxable income that you have. Now, we're specifically talking about mortgage interest today. So I want to talk about the mortgage interest deduction limits, because there is a limit, and the date that there is a specific date on which, depending on if you bought before or after that, you can deduct a certain amount, and that date is December 15th, 2017. So if you bought a house before December 15th, 2017, you can deduct deduct interest on up to $1 million of mortgage debt. If you bought after December 15th, 2017, you can deduct interest on up to $750,000 of mortgage debt. There are a few exceptions to that. Check with your local tax professional around whether or not you had a contract drawn to purchase, etc. But those are the limitations. Okay, let's get into why I really don't think mortgage interest is worth the risk, or that it's not a huge benefit. The first reason is most people take the standard deduction and do not itemize. You can't do both. You can't do a standard deduction and itemize. The 2017 Tax Cuts and Jobs Act went into effect a few years ago, around 2018, and it doubled the standard deduction, which led to fewer people actually itemizing. And if you don't itemize, you can't write off mortgage interest. So, and if you do research, anywhere from 75% on the low end all the way up to 90% rather on the high end of taxpayers use the standard deduction. So most of us aren't even taking advantage of this. So most people don't itemize, and you can't write off mortgage interest if you are not itemizing. Okay, so that's the first reason. Second reason, all debt carries risk. Think about it. Do you really want to carry risk around longer than needed to say you are getting a tax write-off? You are actually going to keep debt so that you can say you have a write-off. So what happens if something happens to your income and now you cannot pay that debt back? To me, that is a huge risk, and me personally, I'm not willing to carry that risk around. Okay. The next thing is, this is really only a benefit if you're kind of stuck with your mortgage, right? So if you're not in a position to pay it off quickly and you have to have your mortgage, so if you can't pay it off quickly, and by the way, you itemize your taxes, there is somewhat of a benefit to being able to write off the interest to reduce your taxable income. It's kind of a backhanded benefit because you have to carry debt to get it. And then next, charitable contributions give the same benefit, right? So you need to check with a tax provider, but you have qualified contributions. And if you itemize, you can write off up to 100% of those deductions. It's the same quote unquote benefit that you would get from writing off mortgage interest, right? See your tax professional to see what qualifies as 100% deductions. And some deductions may be capped based on your income. The last reason I'll give you in terms of why I don't think mortgage interest is a benefit is just the math is just funny. And when you do the math, it truly does not add up to a benefit. Now, I want to give you a basic oversimplified example. And I say basic and oversimplified because in reality, our tax brackets are actually progressive, meaning the first amount of your income is taxed at a lower rate, and taxes begin to rise as you cross the threshold for the upper brackets. So for example, you make $70,000, which puts you in the 22% tax bracket. Not all 70,000 was taxed at 22%, just the amount greater than $40,525, right? And these, by the way, are actual tax brackets from 2021 that we're showing you here on the screen. So in this example, some was taxed at 10 to 12%, which are the lowest brackets, right? And then what they do is they get you what they call an effective tax rate. And that's sort of like the average of all the rates that, you ended up sort of paying taxes in. So in this super simple example that is oversimplified, you make $70,000 after all your deductions. Let's say your salary is $70,000. So that puts you in the 22% tax bracket. Let's say you pay $1,000 per month in mortgage payments for a total of $12,000 for the year. If you didn't have that payment, right, you would owe the government $12,000 times 22% equals $2,640 in taxes. So you tell me that you are going to send $12,000 to the bank to keep from sending the government $2,600? Somebody make it make sense to me. Just make it make sense. You are better off paying those taxes and investing the difference between what you would be paying in a mortgage and taxes, which is $9,360 per year. Like, this is definitely not a fair exchange for carrying around mortgage, which is also risk. So I hope I have done enough today to get you to at least think about whether or not carrying around mortgage debt for purposes of writing off the interest on your taxes is a good idea. I personally don't think it's a good idea. I actually had a pretty in-depth conversation with one of my buddies who's looking for a bigger house right now because he wants to be able to write off more in his taxes. And if you just think about that, I'm going to go get more debt so I can write off more in taxes. It doesn't even make logical sense, but we don't even second guess it because we've been told these things for so long that we just take them for granted and we just go ahead and do it. I personally think it is a better idea to be debt-free, pay your tax obligations, and then invest the difference. Save the difference. Send your kid to college with the difference. Help someone with that difference, right? You saw the basic math that I did on the example, and the math just doesn't work out. Now listen, I am not a tax professional, but work with your tax professional to figure out what is a legitimate write-off for you. And then don't forget, 90% of us, 9 out of 10 people don't even itemize. So we're not even getting the benefit, but we don't look into these details. But I bet now you will. At least I hope you will. Remember this, you're going to achieve much greater things than where you are today if you're willing to put in the work. Conceive it, believe it, and achieve it. I'll see you on the next video.